Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday the 13th of July 2017 and we're commenting as to why we believe gold and silver prices have further to fall, at least in the short term. Firstly, we would like to quote to you a comment made by Peter Schiff, someone we know that many of our subscribers follow and frequently quote. Throughout 2014, 15 and 16, Schiff stated that there was no way that the Fed could raise interest rates. This culminated in probably his last major public statement on that issue on the 6th of June 2016, where he wrote, quote, "The reason why the Fed will not let interest rates go up is because if they let interest rates go up, we cannot afford to pay the interest on our debt, and we would have to default. To avoid the embarrassment of a default, they keep interest rates artificially low. But I think it's better to be honest and default than going through a currency crisis that we are heading into." Unquote. Without going into the merits or demerits of that argument, he was simply wrong. For since the 6th of June 2016, the Fed raised interest rates 3 times. On the 14th of December 2016, the 16th of March 2017, and the 14th of June 2017, with further rises promised for later in the year. This has undoubtedly had a negative impact on gold and silver prices, despite the fact that political turmoil and uncertainty, North Korea, and a new US Presidency, besmirched with accusations of secret Russian dealings, have underpinned gold and silver prices. The stock markets have been on a tear, reaching ever-increasing highs. We have no doubt that interest rates will rise again in 2017, probably by 0.25%. And we predict one rise rather than another 2, which the Fed initially promised. That aside, we listened to Janet Yellen's comments yesterday in full and believe we have gained quite a clear picture of where she intends to take interest rates and monetary policy for the next 12 months or so. Without going into the technical detail of how her policies previously have been designed to keep long-term rates low, she is embarking on a technical stimulus reversal to allow long-term rates to rise while at the same time keeping short-term rates on a slow and cautious rising trajectory. Yellen commented yesterday at an intense hearing before the House of Representatives Financial Services Committee. This is what she said, quote, "Interest rates are likely to remain historically low over the longer term, and that the bank was looking to normalize its policies, neither boosting or limiting economic activity. But a key bank interest rate would not have to rise all that much further to reach that neutral level." Unquote. She also added, quote, "The US jobs market has strengthened and inflation is expected to rise towards the Federal Reserve's 2% target. The global economy has also improved, although economic challenges remain, and that the Fed was committed to relying primarily on interest rates as its key policy tool, and noted that many of her colleagues thought one further rate increase would be warranted this year." Unquote. Now, whatever one may think of the central bank and its governorship, we watched and listened to Yellen very closely yesterday and frankly believe what she claims to be her intent. Now, what was interesting from this meeting was the number of Republicans who were critical of the Fed's push to cut and then keep rates near zero, and buying huge amounts of bonds and mortgage-backed securities in response to the 2007 to 2009 financial crisis, which they believe has led to the slowest US economic recovery since World War II ended. In addition, Yellen's position as Fed chairman comes up for review in early 2018, and speculation is building on Wall Street that a likely replacement to run the central bank would be Gary Cohn, director of the National Economic Council and Trump's closest economic advisor. Cohn is also a former chief operating officer at Goldman Sachs. Now please listen to this next part very carefully. President Trump, on the 3rd of February of this year, signed an executive order requiring a review of the Dodd-Frank Act, which was enacted to ensure there would never be another 2008-style meltdown. The US President said his latest executive order was necessary because, quote, the regulations were too onerous on business and hurting the economy, unquote. Now, it is true that only Congress can actually revoke this rule, and the Treasury Secretary has 120 days to report back his findings and results of the review. But here is the interesting part. President Trump said at the time, quote, we expect to be cutting a lot out of Dodd-Frank because, frankly, I have so many people, friends of mine, that have nice businesses and they can't borrow money. They just can't get any money because the banks just won't let them borrow because of the rules and regulations in Dodd-Frank. So we'll be talking about that in terms of the banking industry, unquote. The president was then backed by Gary Cohn, director of the National Economic Council, and, as already mentioned, a former Goldman Sachs banker, who stated in an interview with the Wall Street Journal, quote, Americans are going to have better choices and Americans are going to have better products because we're not going to burden the banks with literally hundreds of billions of dollars of regulatory costs every year. Unquote. He added, the executive order was, quote, a table setter for a bunch of stuff that is coming, unquote. Okay, so in plain English terms, this means that if he is successful, President Trump will drastically cut back on government regulation and allow the banks to lend and borrow with willful abandon. Remember, he has committed himself to developing an economy with at least a 4% GDP growth target, and he has to achieve this before the next presidential election. The effect of this will simply be that stock markets will rise even further, and do not be surprised to see the Dow Jones hit 25,000 or even higher, as we predicted a possibility prior to Trump winning the election. Gold and silver prices will fall short term, as other investment opportunities such as equities will be deemed more attractive. And then, eventually, the chickens will come home to roost. So under Janet Yellen's existing policies, we see some downward pressure on gold and silver prices as rates are slowly increased and then held. If President Trump gets his way, we shall almost undoubtedly witness massive injections of capital into the economy due to reduced banking restrictions and, frankly, potentially careless lending, resulting in a further decline in gold and silver prices, at least for a year or so, as equity markets become the go-to place for capital investment. Either way, the signs are not great for gold and silver prices, unless a black swan event occurs, or North Korea or some other hotspot develops, or there is a successful move to impeach President Trump. Now, a word of caution. We are not suggesting that gold and silver prices will fall through the floor. What we are suggesting is that we haven't seen their year lows as yet, and can well envisage silver dipping to around $15 and possibly a little lower, and gold falling below $1,200 and heading towards $1,100 territory. At the time of this recording, gold is standing at $1,222 and silver at $15.97, having gained a small bounce at the start of the week, as we predicted in our weekend review. This is good progress, especially as the Bank of Canada raised its benchmark interest rate from 0.5% to 0.75% yesterday, its first rise in 7 years, adding fuel to our view that worldwide interest rates may now be taking a lead from the US, and suggests increasing confidence in world economies. We believe that had it not been for Trump Jr.'s recent email revelation, then gold and silver would actually have fallen further, which shows that political considerations have just as large an effect as economic ones. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its own.